Let me start with a story. When I worked in banking, I recall the very first time the suggestion was put forward to extend microloans to the unbanked and mass market population. The suggestion was met with a lot of pushback. A lot of the sentiments that were shared were that it wasn't a good idea, it wasn't a viable business model. Now, the problem wasn't a lack of markets. At the time, 70% of the population or the adult population in Ghana were unbanked, and so there was a huge potential market. Neither was it a lack of funding because the banks had more than enough capital to disburse these kind of loans. The reason was a more crude one. The general sentiment that was expressed in that meeting was that as Ghanaians, and for that fact as Africans, it wasn't in our nature to repay loans that we had taken unless there was a huge or substantial security or collateral involved. The sentiment was that the mindset of the people was such that they found it unfair for you to ask them to repay money that they had borrowed, especially when you were perceived to have more whilst they had less. A lot of examples and use cases were presented of other institutions that had tried and failed. But through all the arguments and debates, at the heart of the issue, what I was able to deduce was a lack of trust. Ladies and gentlemen, Jumo is a fintech that partners with banks and mobile network operators to deliver unique financial services to customers in emerging markets. At Jumo, we fundamentally believe that access to financial services and financial choices is essential for equality and higher standards of living, and a lack of that access is generally unacceptable. When Jumo first started in Ghana in 2017, it was difficult to get the partners buy-in right from the beginning. The banks and the telcos had been in a long-standing competition where both of them were trying to be the owners of the customer. Now, the customers themselves had some apprehension towards being included in the formal financial system. They found the entire thing intimidating. There was the issue of proximity because a lot of them lived in the rural, peri-urban outskirts. They didn't have the requirements that the banks were asking for, and a lot of them were semi-literate at best. So the entire financial system was just too complicated for them. And once again, there was an issue of trust. Now, the issue of trust ran both ways across all partners. The banks didn't trust the customers didn't trust the banks, and the mobile network operators and the banks didn't trust each other. But all of these players possessed some vital expertise that was key to the agenda. The mobile network operators owned that ecosystem of customers who were using mobile wallets and had all the data on those customers. The banks were the providers of capital, and they were well-versed in the business of lending. It became evident for us that as a fintech that was looking to advance the inclusion agenda, it was going to be our primary responsibility to be that middle party who would manage the relationship between these parties or be the bridge that connected all three parties. Thankfully, we were able to do that successfully. Today, Jumo is a multi-sided fintech platform that leverages on the data provided by the MNOs, such as your mobile wallet history, the customer KYC data, and actual performance data, and also leverages machine learning algorithms to be able to judge a customer's risk profiles and also their propensity to take and repay a loan. With every year that we operate in Ghana, our model prediction accuracy becomes even better to the point where our collection rates are some of the best across the continent. We're able to collect up to 88% of the loans that we disburse on due date, and that number increases to about 96% as at 150 days past due. Now, that goes to show that contrary to the belief that as Ghanaians or as Africans we don't repay our loan, when you actually look at the data, it suggests otherwise. In Africa, we generally have observed that Ghana's collections rates are typically higher than what we see everywhere else. So even though you might know somebody who owes a mobile loan and is asking you not to send money to their wallet, you can rest assured that eventually, even if they don't pay at 30 days, they eventually do repay. In Ghana, on the mobile money menu, we have 3 products. There is the Ahomka loan, there is the Express loan, there is the APSA loan. What we've been able to do is keep our non-performing loan portfolio so low that the banks are able to justify their profit margins, and this makes it sustainable for them. Our partners have been the reason why we've been able to grow as much as we have in Ghana, and it's largely because of that issue of trust. So in closing, let me say this. Jumo has been successful in Ghana primarily due to the trust that has been fostered in us by our partners. The banks and MNOs allowing us to manage the relationships, trusting our expertise and our platforms, the customers having faith in our products and repeatedly coming back to patronize that. Even the regulator for creating that enabling, innovative environment for us to be able to deliver our services, and investors who continue to fund our business to keep us sustainable. It's always difficult when you try to do something new and revolutionary in the digital space, but Ghana seems to be uniquely placed with that ecosystem and an enabling environment that allows us to advance the inclusive agenda whilst harnessing digital innovation. So we look forward to doing more of such in the future and hope that the digital ecosystem continues to grow. Thank you very much.